Yes, what's up, everybody? Welcome to What the FICC. Spencer Israel, as always, joined by Ian Cully, head of FICC at All Star Charts. That is, of course, fixed income, currencies, and commodities. Mr. Cully, how was your July 4th weekend and holiday?
It was nice and quiet. The Cully family has been feeling a bit under the weather, but we still managed to get out and see some family, enjoy the pool, and with some excellent smoked meats, some
Oh, always
chicken and pork belly. It was outstanding. It was
Always
a
a
good
good
day.
choice. Always a good choice. All right, we're gonna do something a little bit different here at What the Fic. What we've been doing for the past couple of months is on all these shows, we've just been giving a high level overview of all of the markets that Ian covers, right? Everything from the dollar to oil to copper to rates. We're gonna not do that today. What we're gonna do is we're just gonna spend the entire show on one market. So today we're talking about gold. We're going to run through all the ways that Ian looks at the gold market, why he looks at the gold market in these ways. We have like a dozen or more charts on just gold today. So it's going to be a completely gold show, all about gold, how it works. Well, not how it works. You know how gold works. It's very simple. It's like one of the oldest stores of value that we have, right? So not really how it works, but just like how to trade it. If you want to trade it now, you want to buy gold now, where you would do that, when you would do that, why you would do that, that sort of thing. So, Mr. Cully, let's start off with what is the first chart we have on our list here? It is
Well,
gold futures. Why are we starting off with a chart of gold futures?
because this is zoomed out chart going back to the mid 90s, and this chart tells us why we should be interested in gold as investors, as traders, and why we need to be looking for opportunities on the long side, not the short side. I believe put in a significant low last fall for gold, and the next directional move will be higher. I think we're getting ready to enter a new secular bull market for gold futures and just precious metals in general.
This chart probably, if you had to pick one, this is probably the only chart. Like if I said, Ian, you can only show one gold chart today, it would be this one, wouldn't it?
Yeah, so I mean, just look at this chart. Is this something that you want to be shorting or something that you want to buy? I mean,
I mean, look, I'm no gold bug, right? And it doesn't help. We're all a product of our environments, and I've in the entire time I've been in the markets, gold has, as the chart shows, gold has not been worth touching. But it's hard to argue with this chart, right? We are at or near a clear level of resistance. And if the market's going to break above that, then I mean,
I think it's off to the races.
yeah, how
And
high
what
could
I
you
love
go?
about this chart is it really highlights the way markets move. They contract and they expand. They contract and they expand. That's why we, as traders and as analysts, we like to err in the direction of the underlying trend, because most consolidations are continuations. They're the continuations in nature. And I think looking at this chart, really, it just highlights that. And next major move, and look at all the contact points here. All those red arrows highlighting the 2011 peak, which is the peak of the prior commodity super cycle, and the 2020, 2022, and the peak earlier this year. It keeps pounding. Bulls continue to test and drive prices, challenging this clear level of overhead supply. And once demand absorbs all of that supply, the price is going to rocket higher.
Okay, so can we get specific here? What are, maybe we have to zoom in. What are the
Yeah.
prices here in question that you're looking at?
So I'm really looking at those former 2011 highs, former 2011 around 1923, 1924. As long as price is above that level, I believe the path of least resistance is higher. Even though we have all these peaks here, you said going past the past few years, as long as it's above those former 2011 highs, it might be messy, but I still like it long. I still like gold futures as a trading vehicle long, again, if it's above that 1923 level. Now, another thing I want to point out with this chart is that you get these 3 peaks here. And one thing I've noticed over the years, one thing I've learned and been taught by those that have come before me, is that there's really no such thing as a triple top. And so when I see this chart, I don't see a triple a triple top. I'm
What do you
starting
see?
to see a potential base, a potential inverted head and shoulders continuation pattern here. So, if we do get a right shoulder, if it gets messier, more messy than it is now, and starts to correct more through price and trade back towards 1800 or 1700, carving out this right shoulder, we'll know, because it's going to be below 1923, right? So I like using this level. I like using that former 2011 high as a line in the sand, as a risk level. And it's been trading right around that level for the past week or so.
So 1923.
1923, 1924, somewhere
yeah.
in that ballpark. Yeah.
And we're at 1931 as we speak here right now.
Correct. So it's right there on the line. So tactically speaking, trading gold futures, again, if it's above that level, I like it long. Below that level, it gets messier. And we could see a possible retest all the way back down here to 1678.
So let me ask you this: below 1923.7, give or take, would you short it?
No, absolutely not.
Okay, all right.
Yeah, I mean, it's I got a trade set up later, in the show that I don't want to share with everyone. Looking at GDX, some might say, "Hey, that's a bit cute," but I think shorting gold below 1923 is just too cute for me. It's just way too cute for me. And you trading against the trend. I mean, if you wanted to get short gold, if you really wanted to get short gold, then you probably did that up there around 2075, 2080, back when it was up there retesting those former peaks from 2020 and 2022. Now you're back down in the upper bounds of a multi-year range. There's no sense in getting short now.
Why is gold futures your favorite way to just get exposure to gold?
It's not my favorite way.
Oh,
I mean,
okay.
and that's the thing. I think what's really important is to understand that there are multiple vehicles for expression of a bullish thesis on precious metals. Now, gold, and I think gold futures, it's a purest play, or GLD, and we'll look at that in a moment. The GLD ETF here.
Yep.
This is an ETF that actually holds physical gold, right? So I mean, this is a pure play. Now, what's interesting is notice GLD is back below. It's trading below its 2011 highs, around 185. So GLD, as far as I'm concerned, is off limits. I'm not interested in GLD until it reclaims that key level. I think if and when it does, probably initial target is up around 240. Meanwhile, I want to see signs of risk-seeking behavior coming back into the market. All right, and the main ratio,
what does that mean? Yeah.
What's that? Yeah, this is the main ratio I look at for that. The silver gold ratio. Silver, the high beta play. I always joke around how silver is gold's crazy cousin. Wild moves in silver. And you notice when silver's outperforming gold, gold tends to trend higher. It doesn't necessarily tend to lead by too much or lag. It's a coincident kind of a relationship or indicator here. So I want to see silver begin to outperform gold. I want to see silver kick in. I want to see SLV. I brought the SLV chart. This is the iShares Silver Trust ETF. It's a nice clean level here around 2050. It's digging in, finding support there. And that's what we want to see. We want to see SLV digging in, catch higher, the shelf of former lows. SLV back below that key level, those former lows, and things probably aren't going well for precious metals more broadly, and gold's probably not challenging new all-time highs. That's probably not the case.
All right. So you're looking at the silver gold ratio as sort of your indicator uh of risk appetite in the precious metals market. But if you wanted to go back and say, hey, you know what, I'm not as interested in that as I am. Just I for whatever reason I'm bullish gold. I want to buy gold. We've already established that you're at this point you're more attracted to the futures than you are GLD, for example. But
Yes.
but we have other plays here. So can we look at some other ways to play gold?
Yeah,
And
I really like playing the gold miners right now, believe it or not. I really like GDX. Even with, the selling pressure over the past couple months since May. Let's pull up a zoomed in chart of gold here. You can see, peaking was that late April, early May, and it's been catching lower since, even with the strong selling pressure in gold. Now, I like looking to the miners for a number of reasons. One, it's dug in and it's holding above this 30 level, this polarity zone going back to 2013, the shelf of former highs. So as long as GDX, yes, still trading below a downward sloping trend line, but as long as it's holding above that level, as long as it's holding above 30, I like it long. And the fact that it's pulling back, we have a potential retest that we can trade against. Right? We have and it's a clear, well-defined level. If we're wrong, and if it isn't a retest and we have more weakness ahead, we're going to know quickly. Right? And that's what I really like about this trade. Zooming in on the weekly chart, last week's candle. Now, I'm sorry, we got an incomplete candle here. Just look at the prior with the long umbrella line down there. They call it the umbrella line or lower wick. That is a bullish hammer, and they call it a hammer because the idea is this candle is hammering out a bottom, right? Now, on the flip side, if we were to see a similar formation, a long lower wick with a small real body at the top of the candle, at the upper bounds or at the end of an uptrend, that would be considered a hanging man, and that would be this would be a little more bearish in its connotation. But anyways, I like this bullish hammer. This is just showing that the bulls stepped in during the week as bears drove prices lower. They stepped in and they finished the week driving prices closer towards where they opened earlier in the week, actually above where they opened earlier in the week. This is a bullish candle. Right? This is a bullish candle, and what it relates to me is that bulls have taken control. Buyers have taken control of this market. And when we drill down to the daily chart, we're also seeing some bullish Japanese candlestick patterns. Last Thursday, we had a bullish engulfing candle. That is when the candle opens below the prior day's close and then closes higher than the prior day's open. And what's interesting about Thursday's candle, not only did it do that, not only did it check those boxes, but it also closed at the day's high. That's considered a shaven head, which is also a very bullish data point. So since then, we've seen two candles successfully catching higher, 3 in a row. That is what they call 3 white horses, another bullish Japanese candlestick pattern. So I like buying the dip here in GDX. I like it. And what's great is that, our risk is well defined against the Thursday lows of last week, which is around 28.75. You can drop it down to 28 if you like. We're only risking a couple bucks here. We also have a bullish divergence in momentum here in the lower pan, this 14-day RSI. All pointing to a potential reversal here in GDX.
Ian, do you have any insight into the relationship between an ETF like GDX and just the price of gold or the underlying asset? during up markets or down markets. Because as Jonathan points out in the chat, GDX and any individual gold miner stock is almost like a levered way to play, like a leveraged way to play gold because of how these companies do business and the way they use capital, and the way they increase their leverage. But do you have any insight into the relationship there, which is between GDX and the price of gold?
100%. 100%, Jonathan. It is a high beta play. A lot of similarities between GDX and silver than GDX and gold. One of the ratios that I look at that I didn't bring today is GDX relative to GLD.
Oh,
And we see the miners start to outperform the underlying metal, that's a big risk on signal as well. We're not really seeing much in the way of that near term, but it's definitely something that I keep my eye on. That's a great point.
that's a signal that you would watch, and if GDX started to really outperform GLD, you would say, "Oh, I'm more interested."
Yes, absolutely.
Yeah, okay,
Absolutely. And in that scenario, I gotta imagine that gold's pressing up towards new highs.
okay, all
When we
right.
start to see that, things are really going to start moving. Yeah, 100%.
All right, you included on that chart in GDX the top 5 holdings. There's been so much consolidation in the at the top of the industry for gold miners. Newmont and Barrick and Franco-Nevada are the 3 largest right now. But there are how many other individual gold mining stocks? Dozens, maybe
Yeah,
100. I don't know.
yeah, I don't know.
There's a lot.
There's many. Yeah, there's many.
There's a lot. You
Maybe
have
25 to 30.
you've gone through the trenches and you have found a few individual gold miner stocks that strike your fancy for one reason or another. Tell us what those are and why.
Well, first up, I brought Osisko Gold Royalties. Broke out last year, and has made it about halfway to our initial target around 20, and since then has pulled back and is finding support at that breakout level. And I just love, this is a great example of polarity 101 in action. Former resistance is now turning into support around that $14 level there. So as long as it's above 14, and since it's pulling back, this is kind of like a play on GDX. Now, I just like the fact that if we're wrong on OR, we'll know sooner rather than later. And it's really well defined around 14. So if it's above 14, I like it long towards 20. Now, just what's that?
I was gonna say the reason, like I'm not like a true technician like you are, but when it comes to gold mining companies, I love this way of just only considering the chart and only considering the price action, because like at the end of the day, what are they doing? They're just digging holes in the ground looking for gold, right? And these companies are are in many ways, this industry is infamous for its use of liberal press releases and hyping themselves up. And that's all noise, man. It's all noise. Just tune that out and just look at the price. And the price should tell you all you need to know. So in this case, this is actually not a bad setup there on OR.
This is a great setup.
Yeah.
What's interesting is that this company is a little different than the other two that I'm going to share. This isn't a pure miner. It's a royalty company. So the way I explain it, they're more of like explorers.
Okay.
So they go and they help research and explore potential mining sites, and then they actually finance the companies that are doing the mining. So if you look at a Cisco, you look at Franco-Nevada, there's another one like Royal Gold, I believe, is another royalty company. Those charts just look different than a lot of the mining charts that have just come under incredible amounts of pressure over the past decade or so. They just hold up better. They're trending really well. I'll share some of those charts, in the future, but I really do like the royalty companies, and OR is retesting a key level that we can trade against.
Okay. What else we got?
Goldfields, which is one of my favorites. wanted to be long GFI as long as it's above $7, and it ran right up towards this shelf of former highs here around $16. Looked like it was breaking out, but it failed. It failed like, many individual miners have over the past month or so. So I ultimately, when this area of the market gets back, gets back on track, if that dip in GDX does turn out to be a great buy signal, then I imagine GFI is trading back above 16. If and when it does, I like it long. Initial target around 25, secondary objective up near 40. So I really like this. And another reason I like it so much is I like looking at these individual miners relative, not to the broader market. Because Spencer, I already know that I like these stocks. So I not only do I want to buy the stocks that are doing well against the broader market, I want to buy the stocks that are doing the best against their peers. So I look at the relative strength of GFI to the GDX, to the miners ETF.
It's a more apples to apples comparison.
Yeah, and it's just been a monster. So I really like GFI. Let's see what happens here. But again, not until it's above $16.
All right. What's the last one we got?
Last but not least, about a smaller Canadian mining company, not quite $1 billion in terms of US dollar market cap. Definitely over $1 billion. We're talking about the Canadian dollar, though.
Hey, exchange rates.
Hey. But you know what? It's a great looking chart. Again, we have a key level to trade against. Former support turning into resistance around $5 for Newfound Gold in FGC. You know how you can tell that it's a small market cap because of that third letter. Is it the third, or is it the fifth letter? When you get like the 5 and like the 6 letters, that's when it's getting down there.
Yeah. Generally speaking, more than 3. Generally more than 3, right? Letters in your ticker, and you are a smaller issuer. That I don't know why that is, or not the most liquid, right? Is sort of the indication there.
But hey, I like this chart. It's a good looking chart. Let's give it a little bit of room and call it 5.25. So if and when Newfound Gold is trading above 5.25, like it long, initial target up around $9. Again, when these things get going, if Newfound Gold is trading above this level, heading back up towards our initial target, gold's most likely catching higher as well. And if and when gold does finally break to new all-time highs and really kicks off this new secular bull market for precious metals, these things have a lot of room to run.
So a lot of the charts that you shared, Ian, are like at resistance or were at resistance and are now a touch below it. What happens first? Does the price of gold break out, or do some of these stocks break out? Like if a breakout's going to happen, what's going to happen first?
Yeah, I gotta imagine since Newfound Gold is so close to this $5 level. Excuse me, I imagine we're buying on strength in FGC before we're buying on strength in gold futures. But when we look at some of these other setups, well, Goldfields as well, it's close. We're probably buying on strength in GFI before gold breaks to new all-time highs. Now, looking at Osisco, we're buying on weakness here. We're buying weakness back towards this 14 level. And in GDX, we're not really buying strength here. We're buying a dip. Now, we didn't just blindly, I'm not advocating blindly going in and buying a dip of any sort. But waited for some clear indication over multiple time frames of possible, reversal formations using Japanese candlestick analysis. So, this isn't necessarily buying high and selling higher.
Yeah.
But I imagine, GDX, if this is a viable dip buying opportunity, that GDX is probably reclaiming this 33 level and catching higher as gold challenges new all-time highs.
So for the charts that are like not quite at where you would buy it yet, but they're close, is this just a case where you just look at the charts like all the time and you watch like a hawk?
Yeah. I'm watching these charts a lot. Yeah.
Yeah. Okay.
I'm flipping through them daily. You know, it really, I look at a lot of weekly charts. So I know heading into the week if anything's close to triggering, and I have alerts on.
Yeah.
So my platforms will alert me if there's a breakout. Also, a lot of these, which is great, because at All Star Charts we have the Rangefinder app.
Mm-hmm.
So a lot of the trade ideas that I'm watching that I have on my alert, I have alerts on for. So does Rangefinder, and Rangefinder is going to let me know when things trigger and where it is in terms of reaching the target, which is excellent. Like my platforms don't even do that. So
yep. All right. Ian is going. That was a pretty good breakdown, Ian, of the gold market. But Ian has more gold charts. This was just a small sampling. I think we only went through 14 here. Ian's got more. He's going to be sharing those on the Gold Rush, which is only available to members of All Star Charts Premium today. Normally it's a Monday. Stream. Obviously, this week is weird, so it's today. Today at 2:00 Eastern time. If you are a member of All Star Charts Premium, stay tuned for that. If you are not a member of All Star Charts Premium and you want to be, there's so many ways to join. I recommend clicking on the link in the description of this video on YouTube. It's allstarcharts.com/join. That will get you the full access to Ian's research as well as the rest of the team's research that is not just focused on the gold market. And where else, Ian? You can always email us here at Stock Market Media, questions at stockmarketmedia.com. If you want to get the chart of the day, that's a totally free daily email that goes out. The link is on the screen there. You can always call us if you have any questions like, All Star Charts Premium, what is that? I want to learn more. I want to talk to someone. You can do that. Number should be on the screen, 323-421-7910 with any questions about that. And what else? Is that it?
Sounds good to me. I think you covered it.
I think I covered it. My YouTube is on such a long delay that I don't always know what's on the screen when I'm talking. So I'm just trusting that it's on the screen when I'm talking. But
I have no idea. I don't look at the YouTube.
Yeah. Well, that's probably for the best. Okay. So I hope you guys like this. We dedicated the whole show today to gold. We're going to start doing this, I think, for every day. We'll just devote the whole show to one specific market. On Friday's show, we're going to be talking grains because we have a guest. We have a grain guest. If you watched Friday's show last week, you heard us break down or try to break down the USDA crop report, the acreage report. We're going to talk about that report on Friday.
We had fun.
Our guest,
fun, didn't we, Spencer?
We had fun. I had a blast. Angie Setzer, she runs a grain marketing firm out in Michigan. She's at Goddess of Grain on Twitter. She'll be on the show. So we're going to have a grain-focused show on Friday. We're talking wheat, soybeans, corn. Did I miss any of them? Wheat, soybeans, corn? I don't know if I did.
We might talk oats. I don't know. We'll see.
Yeah,
I'm excited. I can't wait.
Yeah. All right. That'll be a wrap. If you're watching us on YouTube, hit that like button. We'd appreciate that. And have a great rest of your day. We'll see you on Friday.
See you, everybody.